What's going on, people? How are we doing? How are we doing? I hope everyone had a great weekend. All right. Okay, so let's just so first of all, massive love to everyone that has watched the Keep It Simple series. If you haven't already, then make sure you go and check that out. We dropped part 5, the final part of the Keep It Simple series Friday. We dropped that Friday. Overall, really good feedback so far. So if you haven't already been and watched that, make sure you go and watch that. Howdy, what's going on, Andre? Hope you're well. So we're just going to go through the setups and the ideas that we have for this week so far. Get rid of this momentum zone. Okay, so as we stand, just going to adjust this quickly. Make it a little bit more visible. That is the Asian session range. So again, we're just using that as reference for areas of built up liquidity. We know the way that the market moves. We know the way it likes to take liquid, especially off the Asian session, because generally it doesn't move a huge amount. So it ends up being an area of consolidation, right? So we're looking for selling moves for the euro to US dollar. Now, last week we spoke to you about the principle that we had a bearish move, then we came in with a bullish move, and price action went bullish, bullish, bullish. Then it gave us this area right here, which provided a beautiful sell. So we would expect price action to run this low here. Sell right into that low. And again, we cover the full basis and concept of that in the Keep It Simple series. So I would highly recommend going and watching that, and you won't even have to ever second guess the principles that you see on my chart or any chart that you look at. Really, you can automatically gauge what you're looking at and where you want it to go. So on the daily, you can see the gap is still open here. We create another gap, another gap. So we're looking for this liquid low to be taken, and then this area of demand to be tapped into. Very, very simple. Very, very simple. So what we're going to do is we're going to mark up what we're looking at now coming into this week. Get rid of this. What's going on, my friend? Welcome. Hope you're well. Remember, guys, if you find these streams useful or you enjoy them, hit that like button. We appreciate it massively. And if you're not already a subscriber, the subscribe button is down there too. Let me just adjust this screen quickly here. There we go. That's better. Okay, so same principle here. Oh, let's get this. Let's change this so the visibility is sub 4 hours. Okay, so we have 1 point, 2 points. These are the points we're going to look to reference for shorting the market down. Now, we know the market is most likely going to target this low. We discussed this already and we've explained the reason behind this. we don't want to anticipate something along the lines of this. We don't want to anticipate this. Okay, we don't want to anticipate that. We want to anticipate down. Yeah. So don't anticipate price action going against your bias, because that ultimately means that you're sort of going, you're kind of what do I say, you're trying to go against your own directional bias, when we know that our directional bias a lot of the time is correct. Not all the time, and again, you know, no one's correct 100% of the time. We only come to the charts to find an area that we can work off of in terms of probability. And by probability, we know pricing is going to continue going lower here. So keeping the same basis in mind, we'll come down to the 1 hour. You can see we're still just heavily expanding. Like I say, this is the area, the last area we had for price action to sell, and it sold so beautifully. Then we had another area right here, but price action never came back to it. But again, so clean, the cleanest. Go down to the 15-minute here. Okay, so this is another great example of what I was saying in terms of the concept of liquidity being moved from one area to another. Okay, don't worry about these. These are just lower time frame bot testing. But in here, we took out this high, which was the liquid high from Asia, right? And after this, we only create bullish gaps. The only time we create a bearish gap is here, which is when price action actually starts to sell away. So the same principle occurs. If we were to tap into this area, the sell from here would have been the sell move to continue the bearish bias, right? You can reference off of this, you can reference off of this, but the idea is you don't want to overfill your charts with points where price may pull back to. As it stands, we're only looking for a price action to come down into these lows. We're not looking for much else. I'm going to copy this, stick it in the Discord. Like I said, if you're not in the Discord already, guys, then make sure you drop in there and say hello to everyone. Okay. So nothing really to look out on this so far, unless we get like a clear pullback and a sweep or something along those lines. GU is pretty similar. We were calling short on this all last week. Fortunately, we didn't get up into our areas of entry. We just continued going short, but that's fine. Like I say, if we're expecting a deep pullback, probability of that is a lot less than price just continuing in the direction it's already going in. We're going to pull up some fundamentals here in a second. Going on, Zafar, welcome. Hope you're well, my friend. Okay, so you can see in the top left, we have the fundamentals for today. Oh, we don't. We don't actually have any fundamentals today. I'm lying. These are the fundamentals for tomorrow. So we have the unemployment rate for GBP. We have the inflation rate for CAD. Economic sentiment index. CPI. And New York manufacturing. So not a huge amount. That doesn't really hold a huge amount of relevance for us right now. We'll get rid of that. Cool. So same principle here, guys. If you're looking at price action right now, there's an easy way that we're always going to follow things, right? What direction is Institute traveling in? Down. Very simple, right? I watched your series. Thanks, dude. Appreciate it. Actually, I saw your comment, actually. So, yeah, I appreciate that. Check gold once. We'll go over to gold in a second. So again, same principle. We're looking for this target low here. Go back to the 4 hour. 4 hour, we have high here, high here. Again, we're honestly quite out of the way for that at the moment. This price action coming down to this low is the probable move. Okay. So gold, go to the daily here. So we opened a massive daily gap down here between these 2 points. Go to the 4 hour. So 4 hour right now, we had a bullish gap. We've opened up a bearish gap. So we can see the concept that is covered in the series. You can see this. Money in. First stage of money out. So now we're going to wait for that money in again. So we're looking at the points of relevance. We don't actually have many of, but we're going to look at those points of relevance for longer term moves to the upside, right? Simple. These are 2 points to reference off of. So we can set these as entries. Go down to the hourly and check out the hourly as well. So you can look at this area as potential price action to the upside, but look at the low. This is something we always have to remember. This low we just highlighted on the higher time frame, so the 4 hour. It's also the Asia low. So it's a relatively high point of liquidity. We have targets above. So what's the chances of price action holding this low, sustaining price and going higher, or coming down into these areas and then we see money in, coming back in, and then we can follow that principle. On the hourly, look what we have. Money out to wait for money in. What did we have before? Money out, money in, a nice move to follow that. Same principle from back down here if we go further back. Okay, so in this case, money out, small area of money in, price action comes back into that area, you get a small reaction to the upside before more out. It doesn't actually come back into here. That's when you see the impulsive moves coming. But like I said before, not every asset is going to move the same. Not every day is going to be a 100% perfect, amazing trading day. On the 15-minute, you can see the same principle here. Money out, money in. Now we have money out. So if we come down into here and we see money in, high probability comes from that principle. This is what I was saying in the Keep It Simple series, which is you can use the liquid points as reference. Waiting for money in the 1 hour time frame. Exactly, my man. That's great. Good work. And that's another thing as well. Think about what you just said there in the chat. It's something that a lot of people can't do. People cannot sit and wait, because they sit there and wait and they go, oh, it's not going to work, or oh, it's not going to come through, oh, it's this, oh, it's that, oh, da. When at the end of the day, we have to be connoisseurs when it comes to trading. We're not going to jump in on any old tut. We need to make sure that pricing is adequate for us to actually get involved. Now, you can have the same principle, and you can just look at it in every single aspect of money in, money out. So you could say, I'm not even going to reference points of interest. I'm not even going to reference liquidity. I'm just going to wait for the money out and the money in, which is what I showed you in the back testing in part 5. Now, that in itself is a less probable way of doing it, but it still holds relevance because it still has the same principle behind it. And if we look here, this is a great example of it. So if I get rid of this, let's say our money in, money out principle here. If we're just trading off of that without referencing any points of interest or anything like that, we get a money out at the top, money out, then we get money in, right? So you trade off of here. Price comes down, takes out your stop low. Okay, you get more money out, then you get money in. Price tags into that like so acutely, and then off it goes. So it's almost like, how would I say, trading it off of just the price action itself can work, but it's also going to be less probable in the collective of price action, if you were. I've always said this: if you have something that you're looking at in price, whether you're looking at structure, so remember it's always like this, whether you're looking at structure, break of structure, and you're looking to trade off of something in here and you're looking for it to go high, whether you're looking at a sweep of a low and you're looking for something to happen for it to go high, most of the time it's irrelevant of the method you're using. It's about where it's occurring. It's about where that principle occurs. Is there a reason for you to believe a given element in price is more probable here than it is somewhere else? When you can answer that over yes, chances are you're going to see that more sustainable long-term reactional point. Premise, what's going on? Do well. I traded an EJ and made $10 today by this concept. Yeah, awesome. That's great, man. Love it. That's what we do. And this is what I always say. Anybody that goes out of their way and watches a video and really actually takes in the information and applies it, I openly say it in the video. Go and backtest it. I'm not claiming that anything works. I don't need to tell you it works if you can use it and see that it works. That's the beauty of a concept, because it's not about, oh, do I believe this guy in terms of, is this going to work? Is this going to work? Isn't it going to work? You don't have to believe me. You can go and believe it for yourself. And that's the beauty of it. So it really is. And I'm glad that you've picked this up, Zafar, and you're using it, because that's the main thing. I always say, pick it up, use it. You either use it and you go, wow, this is cool. I'm going to keep practicing. I'm going to refine it and make it something unique to myself. And I'm going to refine points that I like to use and I don't like to use. Or you go, oh, I don't really like it, and you move on to something else. Either or, it makes no odds to me. It's more of a case of, like I've said many, many times, I'm here to be the mentor that I needed when I first started learning. If I can provide the value that I required before I lost thousands of pounds in the market, then that's my mission achieved. Simple as that. So we swept out the low here, but remember this is something that we need to keep in mind as well. Sweeping out a low, like the Asia low here, that's great, that's great. But does it hold the same relevance for us if we're predicting price to go down? No, because there's 2 points here. Always 2 points. And you guys, if you have watched the Keep It Simple series, which I know some of you have, you will know this relevance already. The relevance is this. If we're putting money into the market in a downwards moving direction, what is happening here? Well, what's happening is the lows, wherever these lows may be, okay, the lows, wherever they may be, these are going to have a purpose. And in this case, because we're putting money in to the downside, remember it's money in when you're trending down. It's going to be, when you're trending down, money in travels down and money out travels up, because they're taking high amounts of profit down and little amounts of profit out. From here, these lows are acting as points to aim for, instead of in the principle of it being the other way around. So we change it so it's money in to the upside. A low acts as an area for Institute to reaccumulate liquid from, not accumulate liquid to. So it's a complete reverse. This is why I always say your higher time frame bias is the main thing that is going to define what you're doing and where you're looking at things. So many people may have jumped into episode 5 of Keep It Simple without watching the rest of it and gone, oh, hold on guys, we've taken out this low here, like this an Asia low, it must be important. Then they come down to the lower time frame, they go, oh yeah, okay, cool. And let's say we see a little gap here. Okay, let's see that price goes up, makes a little gap, and they go, we're long guys, we're long. And they go in here, they risk more than they normally would because they've heard me on YouTube and said it must work, it must work. And then it goes, and they go, oh, the system's fucking shit, mate. Oh. When in reality, the principle is we're targeting lows if higher time frame tells us we're targeting lows. If we're targeting highs, that's when we trade the highs. Remember, price is a language. It's a language, and we have to take time to interpret what it's telling us. And what it's telling us in this case is that price action is traveling down still. And even when you interpret it and you interpret it correctly, it doesn't mean that you're going to be right every time. This is another thing as well. You have to bring the probability of being incorrect. I mean, a great example of that is, where are we? Is the 1 hour? Yeah. So right here. So we've got a bullish gap, and we create a space here for price action to go to sell from. And yes, we sell from there, great. But your stop would have been here, so you would have got taken out. Does that mean that it doesn't work? No, just means that unfortunately in this case we got taken out. But then if you look at it in the same principle, and you actually let's stay on the hourly. Let's rewind this. Was that a fundamental move? What time was it? I believe that could have been. Again, that's irrelevant. But we're looking at it here like on the 15, okay? Let's say we're short now. We're selling. Our stop's here. We're aiming for the low, so not huge RR, just 3R there. Price comes in. Okay, we're hopeful, and we just got taken out. Okay, so be it. We got taken out. But what's happened at the same time? Well, same time we've swept out this high and this high. Now we've opened up a space here to tell us that price action may be looking to go down. And what have we had before? Well, we've had money in, which is counter, and now we're having money out. So the principle is going to work across every time frame. It doesn't mean that it's going to work consistently all of the time, but it will work if you apply it in the right direction and in the right methodology. I don't know. So here, that actually play out from here. Okay, there you go. And in this case, the 15-minute was the time frame that decided it wanted to work the best. You can't odds liquidity sweeps at the end of the day. Okay, let's have a look here. Go back down to the last 100. Oh, that's like, dude. This is what we were saying last week. We've been targeting this high from like last week right down in here. Okay, all the targets did not give us a chance to go long. No, it did not. Not once. Went bum, 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 bum. The only place it gave us a chance to go long was here. And we called that out in the live stream as well. Now, if you look at the timing here, we're looking at sort of entries occurring around 7 to 6 a.m. for that initial push. I'm not up at 6 a.m. trading. I'm in bed. I'm in bed snoozing. My son's not even awake at that time, and he's like 4.5 months old. So there is a principle here that we could look at, which is the lows being swept and the lows being swept. We can have a look at those on the 15-minute. I didn't trade them, but we can look. So in this case, they don't even hold any relevance for us. There's nothing here. Gave us anything except for way up here, which we're not going to trade off of that. And the same here. Price swept. We create a space there, which gets blasted by, I believe it was Fundamental or New York Open. So be it. But the money in, money out concept has to be applied, and that's what we were saying before. You're looking here. We were bearish, bearish, bearish. We saw a little push here. Okay, great. Did we see anything on the 15? No, not until here. But we see more money coming out. Then we see big amounts of money coming in. Price action falls back down. We see more money coming in. That's when the move comes. Super clear. So, I mean, we can get rid of this, actually. Get rid of half of this shit on here. We don't need. Don't be afraid to delete your charts, by the way, guys. Get to the was it the daily time frame? Yeah. You look down here, we were targeting these lows if we created a space. Only valid if we stay bullish. This was, what was that? It must have been a lower time frame. Can't be daily. I have a question? Yeah, sure. Go ahead. Feel free to chuck any questions in the chat. That's what it's there for. Get rid of that. We're bullish down here. We're still bullish. This is the target here. All-time high. Area of supply based off of the last in to out move. That created the range. This is where the area of supply sits. Coming up to around the 50% of that now. So still bullish. Remember as well, Zafra, if you're not already a member of the Discord, you can jump in the Discord. There are many of other students in there that can also help out. Until we get a high put in here, our target is this high right up here. Way up there, but that's the target. That's the only thing that is going to be, it's going to be frustrating. When you have pricing coming down and you're like, awesome, 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 I want to trade from here, and then it just goes, that is frustrating. But it's good because you're correcting bias. Can you share details about Nisab? What's minimum investment? So Nisab Investment is a investment firm that I work closely with in Kuwait. So that is Kuwait in the Middle East, as in the largest oil producing country in the world. I am a member of the team. I work completely remotely for them. I am their connection in the Western world. So anything Europe, UK, Africa, you name it, anything that isn't the Middle East is my forte. So they have two different investment programs. They're pretty much just a large investment firm. You invest money in, you get money back. They don't make money unless they make money for you. So they don't charge you anything until they're making money for you. So they have two different investment schemes. They have a new one that they've just started, which is less deposit, but it is slightly higher return, slightly higher risk. You know, it's one of those more risk, more return. The minimum deposit for that is 1,000 USD, which is around 900 British pounds. I don't know what it converts to in any other currencies. But again, that's 10% a month return that they aim to give you there. And they only take profit cuts from profit they make. So you don't pay any upfront costs. The only thing you do is fund an account. That's it. It connects directly to their master control account. Then they have a larger long-term investment, which is lower returns and lower risk, but the minimum for that is 15,000 USD. And the reason for that is because they're a huge company, so they don't really take on small investors. But I would like to say that the newer investment scheme they have, 1,000 USD is pretty standard. Like if you're putting anything less than 1,000 USD, returns of like 10%, you're not really getting much back if you think about it in terms of $100 a month, which is fine. It's good, but the idea is that you can generate more income. It's completely hands-free. So if anyone is interested in that, you can email me. I will put the email on the chat right here. Let me just do that for you guys. So and if you are on LinkedIn, you can, of course, head over to LinkedIn and follow me there, and you'll see videos and pictures. And if you go onto their Instagram, you'll see me on their Instagram. From where I was visiting Kuwait, they flew me out there for a week. Everything paid for. I didn't have to spend a penny. So apart from the McDonald's in the airport. But yeah, they're great. They're a great firm. If you'd like a brochure, so information on their longer term investment schemes, then you can, again, email me and I'll send you the brochure. I have sent a couple out already. I'm just waiting for this to load up so I can post my email in here. Okay, so there we go. There's the email. So for anyone that is looking to learn more about the Nisab investment firm or company, you can also check out their website. Their website is in the description down below. It's there, but to get connected to them through me, then just email me and I will put you in the right direction, give you any information you need. But I do have a full brochure if you wanted the brochure to look at. Check gold on the 15th, by the way. Oh, right. Sorry. Let me check here. All right. So Zafar says, suppose bias is up, and then I didn't enter on the first money out and money in on the 1 hour. Can I enter again on the second money out, either on the 1 hour or 15 minute? So this is the principle, okay? So let's say daily is your bias and daily's up, and then on the 1 hour you're looking to trade it rather than 1 hour 15, whatever it may be. Let's say 1 hour / 15. The principle here is that whether it's 1 hour or 15 minute, money out and then money in should give you a continuation on towards that daily time frame. So whether you take the first money out, money in, or whether you take the second money out, money in, it generally should give you the same thing. Now, like I said before, you can have money out, then money in, and it gives you that area of demand. And let's say price action doesn't respect the next in and out process and it comes through, it can come back into here and give you that move. Or you can highlight, let's say, some liquid lows in here, and price may come down and give you a 15-minute in and out principle, and you can do the same thing. Each point is going to hold relevance. Ultimately, as long as you're not trading, at the target high, you're not like right here, probability tells you that you are going to see pricing go higher. So whether you take the first one, second one, third one, fourth one, it doesn't matter. It's more of a relevance of where does that movement sit within the market? How does that relevance help me? I mean, an example is here. Let's say our bias for this is bullish. Let's go to the 15. Our bias for this is bullish, and we'll go from down here. Okay, so money out, money in. Beautiful. Okay, money out, money in. Partial move, then we get a little push down. Money out, money in. Beautiful. Money out, money in. Price no tap in. Money out, money in. Very tiny, but we do get it. Then money out, money in. I have to delete this. So each time it expands higher. This is a very clean example of it, but the principle is you should see a relative reaction regardless of that sort of first, second, third entry principle. Of course, it's never going to last forever. This is, it's never going to be every time it does it, boom, 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 boom. It's just going to go. But most of the time, if you're following that principle and that basis, you will see it. There's going to be a lot less frequency on the 1 hour time frame. So, for example, here we highlighted how many here did we highlight? 1, 2, 3. I mean, some of them obviously didn't work like that, got taken out. So be it. So 1, 2, 3, 4, 5, 6, 7, 8 that didn't get tapped in, 9 that didn't get tapped in. But then on the hourly, we literally have 2, I think. So 1. That's actually so clean as well. Bearish, bullish. Oh, that's disgusting. And then 2. So we had 2 areas. 1 tapped in and 1 didn't. So that's something to keep in mind. Your time frame is going to give you more or less based off of, the scale. Check gold for new FEG on 15 minute. Sure. Let's go here. Potentially 5 minutes. We got the 5 minute, but remember what I said here. Oh, if this holds, that's great. We can look to trade off that. That's great. Just be aware that the Asia low is also an hourly point of liquidity. I'm just going to run to the bathroom, guys. I'll be right back. Right, I'm back. Dry my hands properly. Right, so would you have, please explain daily JJ once? Sure, let's go GJ. Daily. Okay, so it's a good one. It's a good one to ask. The bias here was that the gap was bearish. This was something that we've discussed a few times with the Discord community, because this is very conflicting, and it's not something you see all the time, but it's very conflicting here because we have a gap which is clearly telling us that prices wanting to go down. Then price action has pretty much chopped up and up and up and up and up without really taking any highs as the high sits here. So in this case, even on the lower time frames, if we go down to like the hourly, you'll see that pricing respects more of a bullish nature than it does a bearish nature. And the reason I say that is because we have considerable amount of times where pricing itself will create the in and out process and just blast through in and out, and then it doesn't tag in, it just goes down. Then we have in, then we have pricing, doesn't actually give us any outs. Still, where are we? Here. Out. Okay, so this one does actually tap in and gives us a short move, only down to the low, and then decides to go bullish again. So what I would say personally is that this is at the moment following more of a bullish narrative, and bearish is not technically the ideal direction to trade this in. Doesn't mean that we wouldn't follow it. Now, what I would personally do is, especially if you're looking at this and you're seeing it as, okay, I want to trade this bearish because there's a bearish gap, that's fine. But I would look at it like the hourly instead and say to yourself, well, because pricing isn't respecting that, what is it respecting? And even when you come onto the 4 hour, you can see the principle of money coming out, money coming in. Price comes down into that lower area, pushes up. Money coming out, money coming in. Price comes back to that, pushes up. Money comes out, money comes in. You can, again, keep seeing the same thing where we get that bullish move. Price comes up. So what I would personally be inclined to do, and what I am doing, I don't really trade GJ that much anymore, is reference the hourly right here, and just see if you can trade on the lower time frames based off of the fact that it isn't running that nicely. Now, the reason I say that as well is because when we come to, let's say the hourly, and we're looking for a money out scenario, let's just rewind here. Let's go to, let's just go here. Okay, so we're seeing money in, money in, money in. We're looking for a money out scenario. Wait for it to come. We see money out, great. So we go to the 15 and we look for the same thing. Do we see any money in at all? We do. We see a small area of money in, so we can now look for some money out again. Doesn't give it to us, it just drops straight out. On the lower time frames, generally, you're going to see that price action is going to disrespect your targets or not reach the points you want to trade them from a lot more. So what it's going to do, not all the time, and this is something that you'd have to validate yourself. I can confirm it, but you'd have to validate it yourself. When you have something like this where the daily is down, but the higher time frame movement is moving bullish still, there's going to be a lot less entries for you to actually get involved in. Unfortunately, that's just how some of the pairs move. I mean, this is a very unique scenario. It's not very often you'll be able to find something like this where you have a gap like that. I would actually be interested to see if this is uniform across all of the GJ pairings. So again, the gap's there. Let's just see. Yeah, it seems like it is. Gold has run away. Hopefully that helps you with that, by the way, Zafar. Any more questions, feel free to ask. Gold has indeed run away. Keeping in mind, if you were trading off of this area, where would your targets be? First target, probably second target, third target. So if we start breaching into these areas, don't then expect price action to react from here the same way. Probability becomes less. The more you travel away from something, probability becomes less that it will continue to react in the way you want it to. So big push up here on euro. Look, let's go back to the hourly here. So gold again, just because we haven't had a clear entry given on the 15, we still have potential to capitalize on the hourly in and out process, because the hourly gap is yet to form. So there is still potential for the gap to form and then to pick up on that principle. Remember, you don't have to use 2 time frames for uniformity. You don't have to use 3 time frames for uniformity. It's all based off of the principle. When you see something happen, then you look to follow that. Of course, no problem at all, my friend. No problem. But we're still going to just watch and see what happens around these points, because remember, like I say, our bias here is for this to go short, but we know that price action is not displaying the principle of that. There's also something to keep in mind, is that UJ is completely bullish. So UJ being bullish generally leans to more of a bullish GJ. Oil, let's have a look at oil. Yes, so oil last week, we said that there's a bullish gap here and we're looking for price action to continue bullish. We gave this area, and this area on the lower time frames for possible pushes up into those highs. Now, let's go down to the hourly. I haven't actually looked at this for a little bit. So on the hourly, you'll see here, that's actually clean. That is actually clean. It's kind of janky looking, but it's actually pretty clean. On the hourly, if you follow this down, so let me just get rid of the session ranges here. We look at our gaps. So let's change the color of this. So gap, 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 gap. We find the first bullish space right there. So that was your area that price is most likely to travel from. Yeah. Now let's just pretend that we didn't even see that on the hourly and we only came to the chart after price action and tapped into this. So then we would take us down to the 15-minute, right? So let's rewind. Go from like here. Now we're going to go to the 15. We can use the same principle. Okay. So we've got money out, money in. Can I have a square? Thank you. Beautiful. So beautiful. Like, and that is, again, that's actually an example of what you asked earlier, Zafar, which is just because we don't capitalize on the first hourly, for example, or the 15-minute, let's just say we didn't see this. Let's say we didn't even see that, okay? We know that the hourly is still aligning with our high time frame bias. We've seen that switch. The 15-minute, we missed this entry, so we couldn't take that. Or let's say, what was it? Like 2 a.m., we weren't awake. Look for the next process to come in. If it decides it wants to hit targets that we've set, then we'd, of course, apply some caution, because it means that you've got to expect an equally high expansion to get to those points. At the moment, we're not seeing any gaps form. Okay, so this right here would be your next space, which is kind of out of the way, to be honest. It's not really ideal. But again, you can't ask for more than that. That's pretty stupid, right? That's pretty stupid. So we found 2 areas, both off of, I can't even speak, both off the same principle, and they both gave exactly the same reaction, even though we used an hourly area to validate the direction and the movement. Then we use the 15-minute to ultimately trade that movement. I didn't trade these, by the way. I'm just showing you, for example, I've said this before, I'm not trying to hindsight you guys into be like, look at this amazing move. Wow, like that's not the case. You know that. That could have just completely wrecked me both times there. It didn't, which is great. A nice proof of concept. And this is another thing as well. You may see other streamers, other YouTubers, other traders, you know, it doesn't even have to be YouTube or whatever, Instagram. A lot of them are out to prove how correct they are a lot of the time. Whereas we're not out to prove how correct we are, we're out to prove how consistently a system can work if it's applied in the right way. So it's not about being correct, it's about applying it, accepting the fact that probability is going to run with you one way or another, and you can trade it and be correct some of the time and make money doing that, or you can be wrong. That's just the way it goes. So, does anyone have like a completely fresh pair for me to look at? So we've got something to mark up. Just give me some random ass pair. Some random ass pair, and we'll go to like a random date and we'll do a little test on it, and then we'll do a markup for an idea of what we could see. G Chef. Sure, let's do G Chef then. That is a really random pair as well. We'll go with Iwanda. We'll delete anything that's on here. 14 drawings, cool. Squish this down. We'll go to the hourly time frame, then we can sort of flex between the lower and the higher. And did someone put like just a random number between like 1 and 20? What's it? Let's say 1 and 10. Seven, sure. Okay, so we're going to do 7 swipes from left to right. So 1, 2, 3, 4, 5, 6, 7. And then I'm going to do the same thing, and I'm going to go 1, 2, 3, 4, 5, 6, 7, which takes us to the 15th of August. At 7, I believe it was. Okay. Right, so we go daily. We're not even going to look on the hourly. Go straight to daily. Bosh. Right. Bearish is the bias currently. Let's go to the hourly here. So there's a principle at play already, which is this. Bearish is the bias. Price action tapped into there. Cool. Right now we're bullish. So let's just wait for money out to occur if it wants to. Okay, price action still running bullish. What we're going to need to do here is confirm that we're still on the 15th. Yes, we are. Jesus. Okay, so this now is a pretty strong indication that our daily bias may be shifting, which is great. We can track that. Okay, so still bullish bias right now. Well, we're not bullish bias, we're bearish, but right, so once we get to about here, if we're still running predominantly bullish, which I believe we will be, had no money out. This is pretty much confirming to us that our daily bias is changing here. There'll be a gap right here. Now we still have to complete this day. Don't know why this isn't loading right there. We still have to complete this day, but it's a pretty strong indication we could be shifting. So we'll go back down to the hourly. So actually, there's something we're going to do. Going to put that here. If we stay above this point, we don't tap at this point, then our gap stays open and our bias will change. So we're still looking for that money out process right here. Cool. If we can get a tag into this, I'm just going to make this a little bit more translucent. Okay, tag in, be it forced to go 15. Do we see a space form here? Is that a space? I mean, I would kind of question that as a space, but it's kind of irrelevant because we've had no money in to confirm that space. Excuse me. So let's just keep playing here. And it's disappeared, so it's actually... I think you might be on a delay there, Bjorn. Okay, so money in. Now we can start looking at that money out. Okay, still money in. Still money in. Okay, money out. Right there. Bjorn, you good, bro? And then you'd be running something like this. Okay, which is actually super tight. Remembering that we are relatively close to the end of the day, I would probably... whether you take this trade or not is going to be completely dependent on you. I would probably question it because of the time of the day. And you're going to be coming into market close. We do get a tap. We are pretty much at my cutoff. Also keeping in mind the daily gap here, we now have a bullish bias for this. So we'll see what happens here, but I believe this will be a stop, in my personal opinion. And we're pretty much at 8 p.m. Okay, so if by whatever reason you stayed in this and you didn't get out before market closed, you would have had a nice little push down into some form of profit for you know. I personally wouldn't have taken that. But our bias has now changed, so no more shorts for us. We're looking for longs. Now, we can go back to the 1 hour and see if we have confirmation of the process we're looking for, which is bearish to bullish. I believe there's a gap here. No? Okay, so we have bearish. We're just looking for bullish to come in. Awesome. Let's go down to the 15. There's our bearish. I don't know why this isn't loading. Okay, there's our bullish. So we'd expect bullish price action from here. Target would be this high, and then, I mean, that's all we have at the moment. So let's just see what that does. Blast straight through. So you take a loss on that one. Bearish. Remember, this is what I was saying before. We're looking at nothing more than the price action itself here. We're not referencing off of anything. So there is no relevance to the point. This is why when I'm on the other charts, I go to the 4 hour. Why it's so slow? And our relevance off of each point, for example. I go to like the hourly. Have a look at the relevance. So we got bearish right now. Let's see if we can get some bullish price action in. Okay, great. So we swept off of this. No bullish on the hourly here. Okay, still bearish. Still nothing. Still nothing. Still nothing. Still nothing. Still nothing. We're just pushing down really heavy here. Go to the daily, confirm the bias hasn't changed. Potential for a change here. What time are we? 2 hours, so we've still got a whole day left. You're really playing tough here. Okay. Are we a new day now? 3 a.m. Did we just cross over into a new day? I believe we did. So our bias now is changed. Yeah. Yep. Cool, so you look for this right here. Okay, nice fundamental move there. So we'll go down to 15. No reaction in there. We are, what is that? 930, 930 here. So where I got consistencies. Yeah, I mean, at the moment there hasn't really been anything apart from that. Everything else has been properly choppy. Oh, we're gonna go back here again. What I said here, bullish price action. We're now looking for that bearish move. The choppiest thing ever. Every time I think it's a gap, it just keeps going against me. Okay, let's see. Nope. And again. No, it just closes every single space. Did we just cross over into a new day? I believe we did. Does that give us a new gap? No, it doesn't. So we still have the bearish bias in place. Still waiting for money in here. Right, there we go. Perfect. It's so slow. Okay, bullish, bullish, bullish. No gap. Still no gap. Still no gap. Still no gap. Right, there we go. There's a gap. So here would be the point we'd look for price to sell deeper into the lows here. Let's see if it wants to do that. So it'd be targeting right here. Stop loss will go above this high or this high, depending on what your kind of preference is. Play. Oh my god, that's so choppy. Okay, so either way, whether you traded it off of this high or this high, you would have got a small push down. Price chopping around like crazy. Target is here. Still completely valid if you left it open. I think a lot of people would have closed out PE at this close here. Market close isn't a great time to hold a position. And then price action comes up and takes the high. So in this case, again, only a partial move there. Now let's go back to the daily time frame. This thing's swinging around all over the place. So bullish, we're still looking for that money out. There. Go to the 15. Classic. Classic. We get a nice area to look for shorts and price action shorts without us. Classic. Is the buyer still down? I believe it would be. Yeah. Hourly, we're still on the out. Okay, money in, money out. Right, cool. If we get short from here. First target, second target. See. It's the same thing again. The same thing. You get triggered in at market close or you get tapped at market close. Price action comes close to your target, then comes back above your entry point. So super inconsistent so far on this one. Hourly, no gaps here. Let's see if we can establish a new gap. No money in to Validate that. Yeah. Bias bearish. Position gets cleared. Then we take out those lows. Beautiful. And again, this is what I was saying before. Using the principle that I showed you, which is following just the money in, or the money in to money out, to then track money in again. That's fine to do that. But price action often is going to come to points of liquidity to then drop down out of the lows. So if we refer back to the same principle and go to like the hourly, look at the way that this is a high. It got taken out. Then if we reference the 15-minute, nothing. Then we have a bearish move. So if we had a bullish gap in here, that would become valid for selling down into those lows. That's why I said before that you can trade it just off of order flow, but the principle is always worth trying with something to back up the liquidity itself and the shift in order flow. I mean, not too sad though. We took that, was it this one? Great loss, and then price action came down, small partial, fundamental no reaction there, small partial here. So I mean, it could have been worse. I've been blasted much worse before. Let's go to the actual current time frame and see where we are. Oh, look at all that liquidity. That's disgusting. Okay, so apart from that gap, price action only stayed slightly bearish within here and then ran bullish. After that bullish move, we've come down. Bias has held bullish for 1, 2, 3, 4, 5, 6. I mean, that is some choppy daily, and that's really choppy. Our bias is still bullish, so let's go down to the hourly here. Hourly. Back over here. Did we take out that low? Didn't. That's surprising. That surprises me a lot. Okay, so our bias is still bullish, so we'd be targeting here, 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 and obviously the high. Get the targets. And we can box these up. Put them as targets. Where's H targets? Where are you here? We have this point right here. I'm gonna go make a coffee in a second, guys. So we've had bearish to bullish right here. We also had this point. Gave a nice representation of that. See the same principle here. You would have got taken out if you entered here or here. So there's 2 points there you would have been taken out. But like I said before, you want to wait for that hourly to reconfirm that. Once it does, that's when, so from here, that's when probability tells us 15 minutes most likely going to continue to play in that same principle. So now if you see the changes between the 15-minute, in this case, price just keeps going bullish. This pair is so choppy back and forth the way it moves. So target these, look towards here. and look towards here. So I'm just going to put an alert on this. I don't trade this pair. Spreads are terrible on this. And then we've got targets here. So this is where you get your familiar kind of, you see it here, where we have entries and targets. So simplify it. All we're looking for is this. That's it. All we're looking for. Or just that. Gold has come back. Let's go over to gold. Ugh, it's so choppy right now. I'm going to check the... Let me check. Okay, no breaking news coming in. That's fine. So no gap created yet on the hourly. 15-minute has come all the way back into here, but the same thing applies. We had this area, but like I said, it's taking the first target here. So instead of expecting price action to just react here again, we should really confirm that it's going to go high again. This is why I said earlier as well, if you just wait for the hourly, I'm more inclined to see this do something like this. Then confirm a gap here. Then we look to go long. Rather than in trying to interpret a 15-minute lower time frame in here, which really has no relevance for us, except for it's tapping into this order block. But this is Asia low. That is an absolutely ghastly gap there. That is horrible looking. Look at that. So you know what? I'm just going to set an alert on this. Let's see. Bullish gap. If that forms, this closes, that forms, that will alert us. We'll know. Oh, this was from last week. Cleanest. The cleanest. So, for everyone that is in the live stream right now, I know we've dropped a few numbers since about half hour ago or so. But between me and the people that are in this call right now, well, not in this call, but in this live stream, or the people that watch it afterwards, we're developing a bot here at PSS. We're developing a bot that will automate this process on 3 different principles: scalping, intraday, and swing. It will be free for testing for a limited number of people. We already have most of these people that we know that are going to get it, and these are our VIP long-term members. But if you'd be interested in testing it and getting your hands on a first sort of testing version of this bot, then make sure you are actively posting stuff in the Discord and you're active member, because when it comes to actually selecting a newer member, you could be that person. If you're a long-term standing member and you're super active in the community and we're on first name basis, then you will most likely be getting a bot to test. So I'm really interested to see where it goes, but ultimately it's going to be 24 hours, 7 days a week. Well, not 7 days a week, 5 days a week. 24 hours, 5 days a week. When are we launching the bot? We don't have a launch date for it yet, unfortunately. Yeah, unfortunately, no launch date yet. Got 4 hour here. Oh, what am I doing? Nothing huge going on here. Again, nothing going on here. We've got alerts set on that. GU, nothing crazy going on here either. We've got alerts. Gold, let's get an alert on that. As it stands, nothing crazy going on. The only thing I am seeing is this being taken, and that's it. But like I said before, the relevance of that is going to be dependent on our bias on a higher time frame. Remember, guys, if you are interested in joining the NestApp investment family, then you can do that by emailing me or checking the website in the description. But of course, if you want questions answered that they do not have on the website, then emailing me is the best way. We can arrange a call, so on and so forth. Also, series 5, episode 5 of the Keep It Simple series is now out. That series is now complete. Follow it from episode 1 to episode 5 and you will gain knowledge to build a complete system from the ground up. Target. Get rid of that. We need that. Did everyone have a good weekend? I hope so. Mondays are so boring. Especially when you have a target and price is just like slowly making its way towards it. It's like, oh, okay. I get the point. You're doing your thing. I get it. 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 I mean, we could always look back and see if just applying the 15-minute concept without using the principle of POI, if you would have been able to pick up any entries along here. Again, these are the entries that were given at POIs on the hourly time frame. Let's just see if there was any principles met on the lower time frame here. Just bearish, 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 bearish. bullish. So if your bearish gap forms, what time are we here? 4 a.m. So form the bearish gap. So from like here, you'd be looking for that to go lower if it wants to tap that. It came straight through it. But again, this is an example of the same principle I was saying earlier. You're running off of something that's pre-existing bearish. It's not actually giving you that in and out process that we explain within the Keep It Simple series. Just have clear lows here. We want these lows to be taken. We'll go back here actually. The other point you'd be looking at would be here. Reference. And then we're pretty much back at where we are, yeah. 5 minutes until we have a potential space right here. Like I said before, guys, if you haven't already gone and watched episode 1 to 5 of the Keep It Simple series, I highly recommend you going and doing that. We've had amazing feedback so far. Don't just take my word for it. Go and take the information, test it, apply it. Prove it to yourself. And it's not like a 10-hour series. It's, I believe, collectively around an hour and a half total. So gold doing exactly what we were calling for here. You're running off a principle right now where on the hourly time frame, we've seen the process happening over and over again. We've seen money. What is this? Why do I have a line? Oh. Get rid of that. I also want a different color. Let's see if we can get a different color here. I like this more. Right. We've got the money in. Cool. Money in, money out. Great. We now know that this becomes our target. Beautiful. Money in. Price doesn't tap into that until now, but this target is already gone. So we need to see that principle of money in. Why? Because we've got the principle here of money out. So once we see money in again, we can then follow that bias of long. That told us that on the 15-minute, we would really be taking a bit more of a risk if we were to just follow it bullish, because the probability is we're going to want to come and take this low out or sweep the low here. Why? Well, we've seen the principle again of money in, target hit. Now money out. So right now we're in a downwards moving market. We need to wait for this price action to show us it's establishing the directional bias that we want to follow. How can we do this? Well, we rely on our bias time frame, which is daily, bullish, great. Hourly time frame, are we seeing that bullish alignment? No is the answer, because we're bearish right now. What would we look at for price action to change this directional bias? We'd look at points of relevance, e.g. structural lows or areas of demand, areas of supply. Or you just let it change direction, but most often it's going to hit this area first. So keeping that principle in mind, do we want to be entering the market yet? Not right now. Asian range, look at what this low is. It's the Asian low. So this again backs up the principle of this being an area of valuable pricing for us. So guys, if you did enjoy the Keep It Simple series, then head over to those videos and drop us a little like and a comment, because it really helps us to reach other members of the trading community and show them the simplicity of trading as its core. Because remember, the principle that we all forget is we only need to do one thing: buy or sell. Everyone gets so confused with, the kill zones and the second that the candle closes on the day of the month of the year of the each equatorial crescent moon, when in reality it's what is Big Bank doing? What is Institute doing? Okay, they're buying. Okay, when are they selling? Okay, great. They're stopped selling, they're now buying. Great. Well, we should probably buy as well. Easy as that. We don't need to do a whole algorithmic equation, mathematical, to do the basic thing, which is buy or sell. There's two ways you want to travel in the market, but when you watch half the concepts on YouTube, you think there's about 1 million ways to travel. Okay. I'm guessing that was an alert we set for the targets, right? Let's go back to oil. So oil didn't leave that gap, so we just let it do its thing. Let it do its thing. Remember, guys, if you are enjoying the stream or you've enjoyed any point of this stream, hit that like button down below, share it with your friends, do all that good stuff. We appreciate it 1 million. If you're not already a subscriber, then hit that subscribe button. We appreciate it 1 million. Well, I think it's safe to say price action has been pretty boring today, guys. Anybody played any good games lately? Look at this principle that we were talking about earlier. Still remains, still remains, still remains. We push up into here. Awesome. But if we don't, then that's fine. We're not going to try and encourage price to go bullish when we know our bias is bearish. If it goes bullish and gets to these areas, that's a win. So we are 1 subscriber away from hitting 2,950 subscribers. 1 subscriber away. I would love to finish this year with 3K subscribers. That would be awesome. We're only 50 away, so I feel like it's a pretty achievable goal, right? So we're taking these highs again here. So DJ, as explained earlier, has been running more in a bullish direction. Lower time frames are showing more bullish presence than bearish presence. Looking for 10 out of 10 artistry. So a massive shout out to everybody that has been and watched episode 5, because that is the most successful video we have released in a little while. That video is doing really well in terms of the averaging and the trending in terms of the views. So we appreciate every single one of you. So one of our members, Spine, taking some longs on Euro today. Counter trading longs on there. He was trading up into these moves. He was aiming for this high. We of course are looking for sales, but it's fine if you want to trade both ways in the market. That's fine. You just use the appropriate management and risk mitigation. Okay, guys, so we're going to go for another 5 minutes. Then we're going to head over to the Discord. Remember, guys, take your time to watch the full video. If you go and watch the Keep It Simple series, so many people watch the first 5 minutes and they go, "Oh, I know it. I understand." Take your time. No rush. If you are in a rush, put it on 2 times playback. Look at that as well. Bearish targets. That was the target. Beautiful. Now that would extend across to here. and then it would extend down to the low here as well, which is what we'd be expecting for the longer term moves. But the short term moves are of course going to be adjusted based off of what we see. Now, when we go to like the 15-minute here, you can see that we have liquid highs based off of the Asia high, and if we go to the hourly, you can see that it's the same principle, a high that swept a previous and then caused a downwards move. So if we come back up to these areas, you can then look for another expansion back into the lows, right? So like this, down into those lows. Beautiful. Mark that up. Go on here. Bjorn posting some nice setups right there. Selling Euro A, I believe. Yeah. Have a look on Euro A here. So my bias would be more bullish on this, but again, this is what I've said before, each to their own in terms of the unique nature of the way you apply the systems. So from what I believe, he's focusing on the 4 hour, which is bearish, and he's selling off of the 1 hour area here. The order block, 50% of that order block, selling down into the lows. Beautiful, simple, super simple. Super simple. I'd be looking more towards this personally, but that is just my own opinion. We swept that low now, so if there's a 15-minute gap that opens up in here, I'd look to buy from that up into the highs. But I'm not using the same system as Bjorn, so it doesn't make his idea invalid and mine valid. Everyone's idea is equally valid. Remember, completely subjective. When it comes to trading, it's all subjective. It's not about being right or wrong. It's about having a simple idea that you can apply consistently, meaning long term your results should be relatively good if you have an edge that data has proven. Okay guys, so that wraps up today's live stream. I appreciate everyone that joined. Thank you everyone that hit that like button and hit the subscribe button. If you haven't already, head over and watch the Keep It Simple series 1 to 5, and I will see you all in tomorrow's live stream. Have a great day guys. Peace out.